Hello, everyone. So we are live. Welcome to this special broadcast on the budget 2023. So we have all been glued to our TV screens and to the Twitter account where Deepak has been live tweeting the budget. And we have gone through the broad announcements, and it seems pretty euphoric in the way how the government intends to spend its money. On the taxation bit, not so much, except for the people who are earning less than 7 lakhs. So this is a good one for them. While we have seen all the highlights and all the broad announcements of the budget, we are doing this live to take you through the finer details. The budget document is out. It's a PDF. We have been scanning the PDF. We have been reading up whatever we could in all this time, and we have took out key announcements and key policies which we think would be relevant to you as our audience, and we'll be digging deeper into them. To help us go through this, we have with us Deepak Shenoy, CEO of Capitalmind, and Krishna, who is our research analyst. Both of us are here. They have prepared a set of things we want to talk about, so we'll be talking about them. Before we start, a quick announcement. Use the comment section in the chat window, or use the chat window to post whatever you would want to talk about, or whatever questions you have, or whatever comments you have. We'll take them in the show as we go by. Without much ado, I am handing over the podium to both of you guys to start it over, and I'll be here taking audience's questions and also sharing my inputs.
Awesome.
Thank you, Nihit. Hi, Deepak. Hello,
Yo.
everyone. So, guys, the thing is that as much as we try to think that budget is a non-event and it'll be happening one day or two, but at least for our markets, or we as a market ka kida, as we call ourselves, this is an event. This is an important event, and because it decides the direction, at least the sentiment for the short term for the market. So we have prepared, as Nihit mentioned, we have prepared a slide of major points that we thought that where the sectors or individual sections which are going to impact because of this particular budget. So let's add that. Okay. So the first thing in that is, let's go top down. So first thing is the budget size is 45 lakh crore, of which, so let's take both the legs. The 45 lakh crore comes from where, and then where it is going to get spent. Out of 45,000 crore, 34% of it comes from borrowing. That is the government borrowing, etc. and all for
Your deficit really.
Yes, correct. And the second biggest one is GST collections, 17%, as you can see here. And third comes under income tax and corporate tax. And just to mention here, I think last year, Deepak, you may correct, Deepak and Nihit, you may correct me, please. I think last year was the one where income tax equaled the amount of money the corporate tax has been the corporate tax inflow, basically. Of the corporate tax structure slash it came down from 33 to 25%. And then 7% comes from excise duties, etc. and all. That is a major portion of how the money inflow comes, and where it is going to spend. Majority, 20% of that is spent in interest payments. That is the biggest one. Second one is central sector schemes, basically the schemes which the central government sponsors and all. 17% goes for it. And then more or less defense and subsidies. Defense, 8% will be spent on defense, and 7% will be on the subsidies, etc. and all. And pension accounts for 4%. So roughly that is how the broader picture looks. Deepak, is this? My question is that, is this year any different, or it has been more or less the same structure from past few years?
Roughly, 20% is a little bit lesser. We should have 25% as interest payment, so we're spending a little bit lesser this time. I think we also have relatively, so tax collections, as you can see, direct taxes are roughly 30%. And if you look at excise duties, which is largely your petrol and all that, customs, which is largely gold and some electronic items and all that stuff, and GST. If you add those three up, the indirect taxes up, the indirect taxes add up to roughly 25 to 28%. So 30% comes from income taxes, 30% comes from indirect taxes. And then you got some bunch like disinvestment, which are your non-debt capital receipts, right? And then most of our liabilities will end up borrowing. So we're borrowing about 11 lakh crores. This is not a whole lot. The reason why it's not a whole lot is we expected a lot more. They probably need to finance about 15, 16 lakh crores. 4 or 5 lakh crores they'll get from these NSCs and PPF and all of that. The remaining they will borrow from the market, 11 lakh crores. Since the borrowing is much lesser than people expected, we expected something like 13 or 14, I guess. The overall bond 10-year bond yield has fallen from 7.4% where it started before the budget to 7.27%, which is where it is now. So in a way, things have compressed a little bit. Where we're spending more, of course, but we're spending a lot more on defense. We're spending 5.6 lakh crores. I think you have this on another slide, right?
Yeah.
Let me just see this. Yes, we're looking at defense spending of nearly 6 lakh crores, which is quite high compared to everything else. And roads and railways, another 5 lakh crores roughly together. These two are spending. So I know that defense stocks went down today. Road infra stocks were okay. Railway stocks went down, but actually the outlay is very, very huge in comparison with everything else. So Ministry of Consumer Affairs and Food is usually the food subsidies. That's where it kind of plugs in and adds up a bunch. Fertilizer subsidies goes to Ministry of Chemicals, and so that's where the expenditure is. But here's where the thing is: the massive spend is in capital expenditure. So India is spending a lot more in capital expenditure this year than it spent last year. You can look at the central government expenditure, which is typically which is about 10 lakh crores this year. 10 lakh crores is equal to center plus state of last year. So effectively, we are going up like significantly, 40, 45%, 50, 45% more. This will actually quite dramatically change the game because it's not actually inflationary. We're not spending a whole lot on subsidies. We're spending a lot more on capex. That means all of the stuff the money is being used to create is going to create assets. Those assets will eventually yield India as a productive economy more money. More money will mean more income taxes, and we'll see how they're changing the tax structure also. The richer you get, you're actually going to pay more money in taxes. That's the second part of this debate. That's the part which most people are interested in. So we'll go through the boring parts first. The boring parts are, we're spending a lot more on roads, we're spending a lot more on defense, we're spending a lot more on railways. A lot of that money is also going to be spent internally. It's not going to be used to import stuff as much as we used to earlier. So a lot of domestic companies will benefit from it. But this is a massive, massive thing. Okay, at least the allocation for capex is one of the highest we've seen in the last few days. But I'll let you continue.
I have a question here, Deepak. So the interest payments are now 20% of our budget, and I know it was 19% last year also. So is this a worrying factor that we are spending 1/5 of our budget paying out interest, or is it the same worldwide in other countries also? How do you look at it?
Japan is 50% of their budget. America is a little bit lesser. So America is a lot lesser actually. But you see, in these places, so look at the tax collections as a comparison to GDP. If you look at 30% income taxes and 30% roughly indirect taxes, right? 60% of this, which is roughly 25 lakh crore, which is coming from taxes for a GDP of roughly 300 lakh crores. Maybe 250 lakh crores. So you're looking at roughly 10% of GDP coming as taxes. Japan and America have nearly 30%. So we have scope to grow because we can actually tax a lot more of GDP in comparison with those countries. Those countries don't have too much room. They're already taxing everyone quite a bit. So they pay Japan pays a much higher percentage than India, though India's largest expenditure is this. America's largest expenditure, I don't think, is interest payments. I think they have a lot more in terms of defense and a bunch of other things as well. So we spend an unnaturally large amount because we pay higher interest rates. They pay 1%, 2%, 3% kind of interest rates. We pay 7%, 8%. So for us, 7% is normal. For them, 3% is high. So if we were to reach those levels of 3 or 4%, then our interest payments will be a much lesser part of our budget. We'll have more money to spend for other things.
Deepak, one last question on this particular slide. So the interest payments only is interest payments or also includes the debt principal repayment also?
No. So there's a difference. So what happens? You'll see a statement called gross interest payments and net interest payments.
Okay.
Gross interest payments are interest payments plus debt that has matured that has to be repaid. Net is I may repay some, but I will reissue some, that kind of thing. So I will net borrow. What is my net borrowing? So if I will actually have to issue, say, 20 lakh crores worth of debt, but my net new issuance is only 11 lakh crores because the rest will be repayment of existing debt, which I have to renew anyways. So what will happen in that case is your gross is higher than the net. This time the gross is also much lower that they have projected. I forget how much the actual number is, but I think it is of the order of less than less than 20 lakh crores.
Got it.
I need to take a look. I haven't seen the debt.
Sure. We can park that question. We can come back again later. So moving on, guys. Yeah. So as we discussed, so the total capex currently stands at 13.7 lakh crore, which is kind of a 4x in the last 8 years, and the majority of it goes to defense and then railway, roads, etc., etc. That is how it is distributed. And coming to the indirect tax part, we're directly jumping to the part B of the section, the indirect tax part. So as you guys see, the kind of sectors where the government is focusing more or less remain the same in the last 3-4 years. Basically, the green energy, EV, ethanol, export, PLI scheme, MSME, roughly more or less the same, and no major differences in their stand or no kind of surprises in this particular indirect tax thing. Any views, Deepak, on this?
On the indirect taxes, I think so. They've only rationalized. I haven't seen all the indirect taxes. See, most of the GST related taxation goes to the GST Council. It doesn't come in the budget. So all they've done is rationalize import duties. I think they've reduced import duties by and large. So it's going to see a lower cost of imports in many cases. In certain cases, they've increased it. For instance, they have done something with respect to gold. I think they've increased the customs duty on gold or silver or one of the two. And we haven't seen what they've done with, they've reduced duties in, say, denatured ethyl alcohol, which is required for both chemical and for mixing, and then for mobile camera, TV panel components, so that you can manufacture the TV panels here rather than import them from abroad. We can manufacture mobiles here, so we need a mobile camera lens, so on. So the idea is to reduce the raw materials duty so that you can manufacture finished goods here. And rather than importing finished goods itself. So keep the import duty on finished goods high, but the raw materials lower.
Got it. Okay, so let's move on to the next one. The topic where everyone has been waiting for, and we ourselves have waited during the speech, direct taxes. So the thing here is that till now we had two regimes, old regime and new regime, and in this particular budget it was more or less evident that government want everyone to push towards new regime, so that they slowly want to phase out old regime kind of thing. So whatever the proposed changes the government has introduced are applicable only on the new regime thing. So first what they did is that they have completely changed the tax slab structure, tax rates completely. So 0 to 3 lakhs, no zero tax, 3 to 6 5%, 6 to 9 lakhs 10%, 9 to 12 15%, 12 to 15 20%, and above 15 30%. That is one change. Second one is that the income tax limit has increased from 5 lakhs to 7 lakhs. And third important point, the highest tax rate right now has come down from 42.7% to 39%. And fourth, they have reduced the highest income surcharge from 37% to 25%. So if you combine all these 4 points, it is evident that this particular budget, who are salaried, who are on the middle class, or who are in this particular tax structure, have been are beneficial from FY23 onwards, FY24 onwards. So Deepak, your view on this?
So it's all applicable to the new regime. Okay, so if you're old regime, that means you're taking exemptions of HRA or ATC deductions or a medical exemption and so on. you will not get any of these new features. This means you're still paying 30% tax above 10 lakh rupees, 33% or 34% above 50 lakh rupees. Above 1 crore, you're paying, I don't know, 36.5, I think. Above 2 crores, you're paying 39, and above 5 crores, you're paying 42.74. That continues to remain as it is. If you choose to switch, and you can switch to the new regime, if you don't have business income, you can switch anytime back and forth. If you have business income, you can switch once, but you can't switch back. When you switch to the new regime, you get these new exemption limits. So if your income is less than 7 lakhs, you're not taxed anyways. So that's gone. In the old regime, that limit is 5 lakhs. Below 5 lakhs, you're not taxed. But if you're 6 lakhs, you should choose the new regime because you won't get any tax anyway. But if you're, for instance, if your income is 10 lakhs, then for the first 3 lakhs, there's nothing. So 3 to 6 lakhs is 5%. 5% of 3 lakhs is 15,000 rupees. Then 6 to 9 lakhs is 10%. So another 3 lakhs, that's 30,000. So 45,000 till 9 lakhs. And the next 1 lakh, that means 9 to 10, because your income is 10 lakhs. You don't have any deductions. Remember, this is like pre-deduction. There's no deductions available. So you get another 1 lakh at 15%, so 15,000. So at 10 lakhs of income, you're paying only about 60,000 rupees plus this cess and all that. So your tax becomes an effective tax rate of just 6% if you get a 10 lakh rupee income in the new regime. In the old regime, if you got 10 lakhs, you may have gotten a rebate, ATC and HRA and all that. Your actual taxable income may be 7 lakhs. And then in that 7 lakhs, still you'll pay some 50,000 rupees. So you have to figure out now whether you should take the new one or the old one. And I'm sure by the end of the day, we'll get 100 or 1,000 Excel sheets floating around. But essentially, it's very valuable. But there's another reason why it's valuable. This concept of 42.74%, the highest tax bracket above 5 crores, is not applicable if you do. That means it comes down to 39%, a good 3.5% savings if you choose the new regime. So at 5 crores, what's the point of any exemptions? You might as well go. There are some exemptions, actually. There are some housing interest related exemptions and all that stuff, which you can no longer take, and some accelerated depreciation. You can no longer take any of those. But your effective tax rate comes down to 39%. So if you make a lot of money, it makes more sense to just go with the new regime regardless. So that is what I have to say. I think there are some other benefits of the new regime. We'll come to that as we go along.
Yes, and not to forget, the default option is new regime. So if you don't select anything next year, it will be new regime. So that clearly says that the government wants everyone to push slowly to new regime. Sorry, Nihit, you're saying something.
Yeah, so this was on the cards. When you have something titled new coming up, the old will go. And this is what we posted on the Slack community also a few days back, that the old has to go. I quite like this structure. Firstly, we are do-it-yourself investors and we file our returns and everything. So we like complexity. We like doing our things. We like doing the ATC and all those things. So the taxation in the old is still lower. If you have a housing loan, if you have a HRA, and if you are doing the ELSS, it is still lower. But I'm thinking for people who are just starting up. So when I started working, I was quite confused about what is ATC, where do I put HRA, the minimum of 3 and all those things. Now people who are just starting up, earning less than 7 lakhs, things are pretty simple to file, pretty simple to handle. And so that the initial years are fine. When they start earning more, they will eventually pay more, because I guess it's just a matter of time that the old thing is going is going away, because it's so probably if you're taking a 20-year home loan thinking that you will get exemption on the interest, I think that's not going to happen for a long time now.
And one more point we have to note is that there is no change in the ETC. The limit hasn't been increased yet. So that is one thing which was expected. I mean, kind of happy if they had done it, but this is good enough to start with.
I'm just happy that the old regime has not gone away in one shot. I was not even expecting any increase. I'm just happy it doesn't goes away. So I think moving on, next topic that we want to talk about is insurance, and we have got a couple of questions here also in the chat box. So insurance stocks are down like crazy today. HDFC Life has lost 12% because of this announcement, where uh, insurance policies which are even non-ULIP ones, where if your premium per annum is greater than 5 lakhs, it will be taxed as full income and not as capital gains. Only your term plans will be tax exempt. Everything else, or if there's a policy which is tax free returns, that will be tax free. Everything else will be, you know, taxed as per income tax. So that makes these policies quite less lucrative, and that's why I think the insurance stocks are struggling. Deepak, your comment on how this will play out for consumer and
Okay,
business.
so the idea is simple. You have people who have bought insurance. They have bought insurance not for the sake of insurance, but as an investment product. The idea being, if I survive, give me X. You were getting a lot of products that were being sold as put 10 lakhs per year for 10 years, and then after 25 years, we'll give you back 10 lakhs per year for another 20 years, and then we'll give you back a lump sum. All of this adds up to a very nice number of, let's say, 7%. Now you're looking at this and saying 7% post tax with an insurance company is a very good thing. So you might as well buy these policies. Now, till now, all the proceeds of such insurance policies are completely tax free under a section called Section 10D. That means, regardless of whether it was insurance or an investment, if it's given by an insurance company, then it's completely tax free when you receive the money. It will continue to be that for any policy issued from now also till March 31st, 2023. That is another 1.5 months, 2 months roughly. After that, any new policy that is issued that has more than 5 lakh rupees in year in premium in aggregate, which means you can't buy two policies worth 4 lakhs each. In aggregate, if it's more than 5 lakhs, then the proceeds, that means whatever you earn out of it, whenever the money comes, is taxed as income. That income you can subtract out any of the premium that you already paid. That means if you're paid 10 lakhs and you receive 30 lakhs, then only 20 lakhs is taxed, but it's taxed without any indexation for inflation. It is taxed as income from other sources. So this is not even a capital gain which you can offset a capital loss against. It is basically money on which you will pay full marginal tax on. And if you have taken this insurance component, let's say of 10 lakhs per month, use the old regime, use this as an ATC deduction of 1.5 lakhs. Then to the extent of that 1.5 lakhs, you can't even deduct it from the cost. So that means if you invest 10 lakhs and get 30, that 10 lakhs which you've invested, 1.5 lakhs you've used as ATC, only 8.5 lakhs can be considered as a cost. When you get the 30 lakhs, you'll pay tax on the remaining 21.5 lakhs as income. So essentially it just kills any insurance policy's attractiveness, even compared to a debt mutual fund. Because in a debt mutual fund, at least you get indexation after 3 years. Here you don't get indexation at all. So that means your tax income is very negative to you. And therefore, the companies like HDFC Life and ICICI Pru, which largely were selling these really high premium policies, they have been hit by as much as 11-12%. LIC has also been hit, but LIC actually does not have so many of these policies. It's relatively smaller, so it's only 3-4 lakhs. They talk to a base that's actually not capable of, for the most part, do not have the earning capacity to invest 5-6 lakhs a year. Very few of them do. So mostly they get people who will invest smaller amounts, for whom this current benefit of tax-free returns continues to exist no matter how much. So if you invest 3 lakhs a year only for 30 years, and the insurance policy gives you back, say, 3 crores, that entire 3 crore is still tax-free. But it won't be so if you've invested 6 lakhs per year as premium, because 6 lakhs per year as premium is greater than the limit of 5 lakhs. So LIC, I think, should be affected a lot lesser than the others. However, this changes one thing. Insurance as an investment becomes that much more unattractive. In fact, it's very good for us as asset managers, right? Because, we were competing with insurance, and when we invest in stocks, our customers have to pay 10% or 15% as taxes. Whereas if they invest in insurance policy, they pay 0% as taxes. So you're always getting the short end of that stick. So it's good for people like us who are asset managers, because it becomes kind of equal. In fact, better than equal, because insurance companies, even if they invest in equity, their customers still have to pay 33% or tax, because they'll be in the highest tax bracket or higher tax brackets. Whereas as capital gains and equity and mutual fund investors, you'll pay only 15%. They haven't changed those slabs.
also, Deepak, government is making the ULIPs more and more less lucrative, because even last year also they have earlier the entire returns were tax free. Now last year they introduced that 2.5 lakh premium limit. Now they increased it to 5 lakhs. So it has been consistent. So government do want to make this particular asset class less lucrative, or
No, the ULIP thing doesn't change at all. It's only the non-ULIPs that have the 5 lakh limit. The ULIPs still have the 2.5 lakhs. So ULIPs are also taxed in a different way, where the
yeah.
premium is more than 2.5 lakhs per year, they're taxed.
Yes.
What
So basically,
happens now?
insurance, they have been increasing the taxation basically, which wasn't the
Yes.
case 2 years back.
Yeah, it wasn't. In fact, now you can see, some of these stocks have been just battered. Yeah, I mean, I would say in general, you should see a much lower impact for LIC. ICICI GI is general, so it's not really life insurance, so it doesn't get affected so much. But ICICI Pru and HDFC Life and SBI Life, these companies have relatively much higher components of these particular elements. What will this will do is actually increase LIC's market share. And as a disclosure, we own LIC in the PMS, so I'm happy for LIC in this aspect because they have the broader, relatively lower economy customers, so they will get less affected by something like this than the HDFC Life and the ICICI Life.
So that's on insurance. And but Deepak, is a fall in stocks like HDFC and ICICI life insurance, is the 12% fall warranted, or I'm just asking you to take a shot here whether the business is capital so much that a per day drop of 12% is justified, or do you see more weakness? Do you see it?
So I think Vibha Padalkar came on TV and said 12% of my top line is impacted. That means the top line will fall by 12%. The new premium will fall by 12% simply because this exists. I think technically it is too early to estimate how much this is. For instance, it has only been a few years when mutual funds are taxed, but insurance policies are not taxed, and they were just getting into the act of saying, "Boss, now we can go and say, hame paisa do yaar, we are better off compared to mutual funds, compared to even FDs, compared to most other things long term." Now they can no longer do that. So I think the impact may be higher than 12% for some of these companies. It may be much lesser for some of the others. So I think is the fall over extreme or not, we will actually have to see, because it'll be based on how these companies react. Remember that very few of these companies have as much feet on the street as LIC does, right? So LIC can, when it has to change strategy, it takes a long time. That's why it's not been able to introduce these products at any meaningfully fast pace. There's so many people on the ground. To change your workforce to say, listen, don't go to the high income people, go to the lower income people. You're going to need a lot more feet on the street, and B, your return metrics are not going to be the same. Your cost to income is going to increase over time. So the impact on some of the complexities of what happens after they do something like this is going to be different. What they may be forced to do is sell more traditional insurance, which is not investment. So term insurance, for instance, because if you buy an investment policy and you die, your next of kin gets all the money without any tax, regardless of whether it was 5 lakh premium, 10 lakh premium, 20 lakh premium. So maybe they have to sell you policies that say, well, save it and give it to your kids. How effective that is, because if I can't enjoy the fruits of my money, then why am I saving in the first place? That question nowadays people are asking more and more. बच्चे तो कमा लेंगे, हम क्यों, मतलब, why are we, so that question, if you start getting, and then things, so I think impact we'll see over time. Abhi to it's like you've just received the Excel sheet, you used your Excel sheet and figured it out, but the real impact will come in business in a while.
I think the point I'll take away is that companies would have to rethink their product mix and how they market to and to which audience.
Yeah, I mean, I know the management has said 5%. I don't think it's 5. I think it's much more than 5%. And remember, profits in the insurance business are not on a quarter-on-quarter basis. Solvency margins, everything changes. So you will not see this impact in the longer term. The EV, that is the embedded value of the companies, will be affected far more than 5%, in my opinion.
Right. So moving on from insurance, and something that's going to make all the parents and senior citizens very happy is senior citizen savings scheme, which was earlier the maximum amount you could invest was 15 lakhs. Now that has been doubled to 30 lakhs. This is a great avenue to park retirement corpus, and I think the interest paid here is 1 or 1.5% higher than the
It's
what PSU
8%.
banks offer. What
It's
so
8%.
so this is great news, and I don't think there is anything negative about it. So Deepak, your quick comment on this before we move forward.
So this actually means, so SCSS, I don't know what the current interest rates are. They used to be 8%.
It's
If
currently
it's
8%.
still 8%,
Yeah.
that means you can, for your senior citizens, parents, or if you're a senior citizen yourself, if it's a couple, they can get up to 60 lakh rupees at 8% per year. With Because the applicability was earlier 15 lakhs per person, it was only 30 lakhs. So at 8% also, you're getting only 2.5 lakhs, 20,000 rupees per month. Now you can get 40,000 rupees per month as income. Of course, pre-tax income, you still have to pay tax on it. But 40,000 of pre-tax income can be achieved in a relatively low risk way, because SCSS is for the most part safe, so the way the structure is. So this actually ensures that your people who are retired get a higher, relatively safer income base without having to struggle too much. So if you're planning for your parents' retirement or your own retirement, this is probably one of the good instruments to plan for, and parks a good 60 lakhs before you start thinking of other fixed income instruments.
So on this thought, I just got a thought that we were discussing, and it was there in media, that ATC exemption should increase because inflation is so much and it should be doubled in the last 10 years. That has not been done, but this has increased, which also shows that government is acknowledging that 15 lakhs is not enough for senior citizens. The retirement corpuses have gone up, so that corpus is also higher, and maybe that this is an adjustment that is made. They could have easily done it, increased bit by only 5 lakhs, and it still would have been 33% increase, but directly doubling is kind of an acceptance that inflation is playing a part, and this is a step that was needed.
It's possible. It's possible. Yes.
Yep. So next up, we have the market-linked debentures. We had a question about this in the chat window. So if I'm not mistaken, currently MLDs are taxed at 10%, no matter what the structure of the MLD. And proposed is that these debentures, market-linked debentures, will now be taxed at short-term capital gains plus whatever the surcharges are. So as Deepak has written in the first sentence itself, this essentially kills the MLD industry.
Yeah. So I think here, I mean, like, before I go to Shiv's question, MLDs are essentially products like this. Okay, we've written an article about this. We'll post a link. We'll have an article about this concept as well. The idea is simple. If the market goes up 50%, I'll give you 50% return, or I'll give you 48%. Market minus 2%. If the market falls 50%, then you will lose only 2%. So as a product bhi banta hai, this is called MLD, market linked debenture, because it's linked to the market. Recently, what they were and this was taxed at a differential way. This was, if you listed the MLD and you sold it after 1 year, you had only 10% tax. So if the market goes up 50%, you make 48%. On that 48%, you pay only 10% tax. Very good. But it was almost structured like a debt investment. Okay. Recently, what has happened is they said, oh, if the government bond falls 50%, then we will you will get 0% interest, otherwise you'll get 9%. No, government bonds don't fall 50%. So obviously it was a sham MLD. So the reason why people would buy it was because 9% आ रहा है, एक साल बाद बेचेंगे, 9% का only 10% tax. So I make 8.1% post tax. Fantastic. Nowhere else do you get this return. Fabulous. Big time sales of MLDs were happening based on this very phenomenon. However, in this budget, what they've said is, if you classify yourself as an MLD, whatever this classification, there's a SEBI classification of market linked debenture, any sale or any return or any redemption or anything is going to be classified as a short-term capital gain. You can sell it after 10 years also, it doesn't matter. Short-term capital gain hoga, and short-term capital gain in debt. Because it's short-term capital in debt, even if it's linked to Nifty, the short-term capital gain is in debt only. The debt capital gain is taxed as if it is part of your income. That means marginal rate, it could go all the way to whatever, 42.74%. So the reason you buy that MLD, which was for the tax efficiency, is gone. So that means the whole MLD industry, the way it stands today, is pretty much dead. And you no longer have any advantage of doing MLDs for tax arbitrage. The tax arbitrage, in fact, applies to even MLDs you currently hold, which mature after 1st April 2023. Which means, अभी तुमने बेचा तो ठीक है. That means you can sell it today in the market, निकलो, tax मत भरो, या जो भी 10% tax भरो, whatever, that is fine. But after April 1st, 2023, if you sell it or you redeem it, then the gain, whether you bought it earlier before this budget or not, does not matter. You will get taxed as short-term capital gain. So remember that. And if you can sell and get yourself a lower tax regime, you should do it. But otherwise, you're going to face this as a hit. In fact, chances you can't. Nobody wants to buy it. I mean, they'll only buy it at a ridiculously low price for you. So I would say at this point, the MLD industry is finished. This also, again, good for us as asset managers, because we as a PMS or even for people who run mutual funds, you can't issue MLDs, right? Only NBFCs can issue MLDs. So a lot of these companies who had NBFCs were doing this MLD game primarily to shore up their own capital reserves. This game will be over. Some of these companies will die. We'll talk about this as the time goes by. It's not the time to talk about which companies will die. But many of them are using MLDs because they can't go and borrow from the market. And instead, they're borrowing using these MLD structure. Recently, a lot of listed big entities have also done the same thing, created MLD structures and listed them. That is out the window. No longer will they be attractive to anybody. Even if they issue it tomorrow, it won't be attractive. Because remember, even if you own it before, if it matures after April 2023, this new rule applies. This essentially means the death of the MLD industry. Positives note, it means good for equity and debt markets, because it doesn't apply to NCDs, non-convertible debentures, which are typical debt securities or government bonds or tax-free bonds, because they are not market linked. Only thing that is market linked is something that is linked to something which is in the market. An NCD is a plain old debt security which says, you give me 100, I'll give you 8% interest every year. That 8% interest is taxed as interest if you receive it as interest. If you sell the bond at a profit, that bond profit is always classified as capital gain. And that does have a better taxation structure, in the sense if you sell it after a year, you still get that 10% tax on a regular non-market linked debenture. So essentially, a non-convertible debenture, an NCD or a bond, a government bond, will not have this rule. This only applies to what are market linked debentures. I hope that answers your question, Shiv, as well.
Yep, I think it does. So a very quick intuitive question on this is, the current tax is 10%, STCG is at 15%. So is this 5% tax on the profits so much that MLD suddenly get unattractive? If you could quickly help with an example to understand this.
So let me give you the example. Let us say there was an MLD that said, yeah, you know what, I'll give you 9% interest. And I think, let me see if I can search for market linked debentures. Was there a recent issue? I think there must have been a IPO or NFO or something like that recently. I don't remember any. Right now, I think there was an Edelweiss one. I don't know if that was it. But some of these valuations are, to give you a quick example. Well, I can't seem to find the prospectus right now. But the concept was simple. The MLD was issued at, say, 100 rupees. It was typically a 10 lakh rupee or 1 lakh rupee debenture, right? So you take the 1 lakh rupee debenture and you say, well, I will give you a 10% interest rate. Now, you normally would not lend to Edelweiss at 10%. 10% is very low for Edelweiss. Edelweiss is borrowing at 11-12% in the market. But the reason you borrowed it, you were willing to give it at 10%, was Edelweiss said, listen, if the 10-year government bond falls by 75%, I'll give you 0. Otherwise, I'll give you 10%. And then the thing was sold to you as, sir, आप ऐसा करो, इसको अभी खरीदो, next year आप बेच दो market में, and don't worry, we'll find a buyer for you. When you sell it in the market 1 year later, you will get this 10%. You have to pay only 10% tax on it. So 10 rupees अगर मिला, 1 रुपया आप tax में दे दो, 9 रुपया आपका 9% post tax return you're getting. You're thinking, हाँ ठीक है, it sounds okay, let me do it because it's advantageous. But if I told you now that Edelweiss is giving you the same market debenture, but no matter when you sell it, it is short-term gains. And then for the 10 rupees that you earn, you have to pay 30% tax or 40% tax, depending on your tax bracket. Let's say 35% tax. So you're going to get only 6 rupees 50 paisa after tax, 6.5% post-tax. Then you'll be like, no, I'm not going to buy this. I want a higher yield. So Edelweiss is going to have to issue the same MLD, if they want it as an MLD, at 11, 12%. That is no longer feasible, right? So you end up with a situation where the cost of capital for some of these entities goes up. You are no longer attracted to this NCD because post-tax returns are much lower, or this MLD. And you might actually go and say, listen, aapka NCD to 11% pe, why don't I buy that? Because post-tax, the 11% is greater than 10%. Pre-tax 11% is greater than pre-tax 10%. So I'll buy your... So either ways, the cost of capital for an Edelweiss has gone up, and for you, the return of 9% post-tax is no longer available.
Right. Okay. And this ties up with your point where NBFCs are using MLDs as a means of raising money.
Yeah, I think it was. I mean, I think bunch of them. I shouldn't single out Edelweiss, but I remember Edelweiss as an issue recently, maybe a year back. But I don't know when the others have come in. I'm sure they've come in recently. They're typically distributed as structured products. Sometimes the privately linked, privately issued debentures.
Right. So okay, guys, moving on. I'll hand it over to Krishna to take the other segments that we are going to cover. So we are going to cover REITs, InVITs. We are going to cover LRS. We are going to see how the market did today. So over to Krishna and take it from here, please.
Yeah, and we'll take Q&A also. So guys, stay with us. Yeah. So one more market segment which got impacted in this budget is REITs and InVITs. So what happened is that every REIT or InVIT investor, basically the trust, first let's talk about the trust, makes money in three different categories. One is the interest income which they receive from the SPV, the dividend income, and the principal repayment. Till now, the interest income is taxed at slab rate, dividend income is taxed at slab rate, but the principal repayment was tax-free in the hands of the unit holders. That is gone now. So all three payments, that is the interest income, dividend, or principal repayment, are completely taxed at the slab rate. So the thing is that you may have to pay more tax, and the current yields for InVIT and REIT, which were looking lucrative, may not look more lucrative. The price have to adjust explicitly for that, etc. and all. So my one question, Deepak, is that REITs and InVITs as an asset class is not very new. They are hardly 4 or 5 years into the market, and they are just now getting popularity. Why the government want to tax at right now juncture? Because no, I'm not sure their government is not going to earn much from this particular small segment. What could be the reason, Deepak?
So it's very interesting because it's a tax arbitrage, right? So when you buy an REIT unit, you're not lending the REIT money. You're just buying the unit as a unit of a trust. The trust, effectively, the amount you're putting in is capital, right? And the trust then takes that money and then lends it out to some of these companies. It earns the money back as repayment of capital. It then distributes that repayment of capital back to the investors, saying, oh, we got our capital back. But at the same time, when it gives it to you, you're not being taxed on that repayment of capital, because it is supposed to be repayment of capital. Of course, they get interest income that's come to you, that's taxed, dividend income that comes to you, that is taxed. But repayment of capital was not taxed, right? So this is complicated because now you paid something for a unit, you got some repayment of capital. Is your cost base of your whatever you bought come down by the amount of capital you received? Is it not? There were a lot of questions on this. People assume that, okay, repayment of capital is not taxable. But now the government has said, listen, we don't want that complication. Whatever that repayment of debt is, let us consider it as income only. You distribute it, it is income. If you keep it and do something else with it, that's different. But remember, REITs, InVITs have to distribute some 90% of what they get, right? So they can't keep too much for themselves. So in the end, any repayment of capital also becomes taxable in the hands now from April 2023. The good thing about this is, you have about 1.5 months or 2 months before, this applies to you. So you may be able to get one more distribution in the old regime where the distributions are tax free, and then you can sell the units and figure out what you want to do and all that. But in general, I would say you shouldn't buy REITs for this small tax advantage of this, a principal repayment or repayment of debt. You should buy it because the yields are either high enough that you like it, or they're growing, in which case you're getting a growing annuity rather than a fixed annuity, which is a reason why you want to buy those. So I expect some correction in the prices somewhat, but in general, the yields of REITs have reached 9.5, 10%, where typical bonds of that need of that credit quality are still trading at 8%. So we're already at a stage where REITs are an attractive stage, even if all the income is taxed. So I would say this is not significant for most of us. What may be better is if a mutual fund buys the REITs, because it's not taxed anyway. So you might as well buy a mutual fund that buys the REITs rather than buy the REITs yourself. It's just one of those things that has changed the game for REITs as well. But all it means is that tax planning using REIT is not a good idea.
Cool. So let's move on to the next topic, LRS. Okay, guys. So your international travel and your stock investments, international stock investments, direct stock investments are going to be expensive. So the thing right now is that till now, excluding the education amount which you send out or the medical treatment emergencies, etc., we're taxed at 0.5 percentage and 5% up to a limit of 7 lakhs. Now that is gone. So right now, except for the medical and the education purposes, everything should be TCS, the tax collected at source, as 20%. In other sense, if you are looking to transfer $10,000, $2,000 you have to pay tax, and the net amount that goes there is only $8,000. So this is going to impact big time, especially if you're directly investing in the US markets via whatever platforms available right now, or if you want to have a travel, if you want to looking for buying any asset in the international market, etc., etc. So that is one thing. And just want to check with you, Deepak, why the government is looking at LRS from this particular lens, like they want to tax more, or that on a TCS level.
So essentially, it means the government is saying, listen, I want to collect tax from you in advance. Earlier it was 5%, now they made it 20. Thoda zyada greedy ho gaye. So the problem is this: let's say I travel abroad, I buy Amazon Web Services ka kuch in a startup. I do anything. I bill it on a credit card or a debit card. Apparently, both credit. Now I thought credit cards were not LRS, but apparently the banks are treating them as if they're LRS. So they will now, from April 1st, 2023, deduct 20%. So you buy $1,000 worth of something, $200 worth of rupees goes and sits with the government as advance tax. Now earlier 5% was deducted, so $1,000 ke liye $50 was deducted, but that $50 came back to you saying if you haven't spent 7 lakhs per year, then we will pay you back the 50 whatever TDS we had done. So after 15 days, that money would come back to you. Now what will happen is 20% will go, it will stay gone. It will never come back to you unless you wait for the end of the financial year, go and claim it back from the government saying, I paid extra tax, please give it back to me. Or you have other tax to pay. Let us say you're a consultant, you're a businessman, you're a business that needs to pay tax. You will go and say, I had to pay $100 of tax or 5,000 rupees worth of tax. You already collected 3,000 rupees as TCS for my foreign transactions. I'll pay only 2,000 remaining. If you're a salaried employee, you can go to your company and say, Dekho boss, I went abroad. It was a government company trip and I spent $1,000. They took $200 as TCS. My income tax, please assume that I've already paid $200 worth, which is 15,000 worth of income tax. Please reduce the TDS on my future salary. That is also possible because yes, your tax has been paid in advance, so it's fine. This can be done. It's just now a cash flow pain in the neck. So if you're a startup that is making losses and buying a lot of Amazon Web Services, your 20% is also extra is gone, and you have to wait for next year's tax filing for you to claim it back. And you're making loss, so वैसे ही tax नहीं है. So you have to claim it back, but now you have to pay 20% more. They're trying to basically reduce the amount of foreign exchange outgo on some of these transactions, perhaps. More importantly, if you invest abroad, that also classifies under this LRS thing. So if you go and buy US stocks, I know that SBM has been banned by RBI now recently for doing these transactions, but people are using that route in money and a bunch of other things to invest abroad. Now you get a 20% TDS on every transaction. So you invest $5,000, $1,000 will be taken by the government as TCS, tax collected at source. Now you will have to account for it at some level, which means that if you're a retired person who does not have too much of an income, then you're unnecessarily paying extra tax. So you won't want to do this. You'll only want to do this if you have other taxes to pay and you can offset these taxes and so on. 99% is not a big problem. Like for me, it's not a big problem. If I travel abroad once in a while, I'll spend something, it'll take 20% extra. Okay, I'll come here. I have other taxes to adjust with, so I can talk to my CA or talk to our company accountant, make sure all that stuff is sorted. I don't have to pay extra tax. It's just temporary cash flow issue for me. But it's not the same with everybody. So this whole foreign investment market will come down substantially going forward. In fact, it's still better then to invest your money through a mutual fund instead, which invests the money abroad. They don't use LRS. Does it affect mutual fund FOFs? I don't think I don't think they use LRS to transact money. They use a different regime. And because they don't use LRS, this rule is not affected. This is only for LRS-based transactions.
Right. There's a comment by Prakhar where he's saying that you have to make profit. So this is about the point which we made where startups, they are not making profit.
So Capitalmind makes profit, so we are okay. But if people don't make profits,
but because Deepak, we are based out of Bangalore, we have a soft corner for startups that don't make profits. So we worry about those things, Prakhar. So because we are in Bangalore.
I think this topic, this comment also makes sure that you transfer money LRS to invest in markets where Nasdaq itself is falling, and the entire US market is falling. So you have to make profit. On top of that, there is a 20% deduction. So
I think quid pro quo is very fine. If US investors invest in Indian mutual funds, they are taxed in the US as if they are terrible instruments. They're called PFIC instruments. Okay, the US hates it, the fact that US citizens or US residents or US green card holders invest in Indian mutual funds. So they say invest in US mutual funds. Fine, don't invest in Indian mutual funds because they make it painful. We have said, "Okay, boss, we'll make it painful to invest in anything in the US." So by the way, this applies even to startups. If you have invested in a startup fund through this LRS route, then also you have to pay 20% extra tax. It's not extra tax, it's just tax collected at source, but it's just meaningfully extra amount of money.
Right. So one last question. So on overseas tour package, I always thought the rationale was to charge TCS because if you're traveling abroad and if you have the money to travel abroad, then you should be filing returns. So maybe what we anecdotally know that there are many people who have fancy cars and who go abroad. The number is higher than people who pay tax, like anecdotally. So maybe this is a way to increase the tax net also.
Possibly, I think they will collect more money as tax. They may not refund as much, or they might say, like, "Baki tumhara tax to aise aayega." So it is just a way for them to say, if you're rich, pay tax, right. And we just collect in advance. Nahi tax nahi hai, to wapas le lo na, refund mang lo.
Right. And
it's a cash flow pain in the neck, that's what it is.
Great. So I think we can move on to the next one.
Okay, so the thing here is that right now under Section 54 of Income Tax Act, the long-term capital gains, if you invest that particular money to buy a house, you don't need to pay tax without any cap. There was no cap till date. But from this budget, the government had placed a cap saying that up to 10 crores is okay. If it is more than that, you have to pay pay tax. So this may impact more of affluent people than the middle class, but that is how it is. So quick note from you, Deepak, on this.
Yeah, so basically it's like this, okay. Take any capital gain, whether you invest, you made that gain using stocks, gold, private shares, kuch bhi. You could take the entire proceeds and invest in one residential house. I think you can do maximum one residential, or one or two residential houses. And that can be any cost. You make 600 crores of gains, you can buy 500 crores of property, or even 600 crores of property. And the gain would be completely offset. You would have no tax to be paid. Now, the income tax department says, boss, this was because we wanted housing to increase. Now, ये 600 करोड़ का क्या करेगा आदमी? एक घर खरीद रहा है, उसने उससे किसी का फायदा नहीं होगा. So they're saying, boss, it's not intended for that thing. So above 10 crores, you get only 10 crores. You buy a house worth 50 crores, you get 10 crores. 40 crores per tax baro. Right? So you have a capital gain of 60 crores. The funda was that it's not just the capital gain, to invest the whole proceeds in the house. But typically, people who have started companies, they have bought shares at 1 rupee per share. They sell shares, they have sold it at 500 rupees per share. So most of the return is just gain. They take the full gains and buy houses worth 50 crores, 40 crores in India, in Bangalore also now. You're getting a lot of places at 40 crores per house. Now, why was this attractive? Is because, wo gain hai na, isme dal do. So that is the way the people thought about these things. And this was gain in anything. So even if you owned a house and that house was 50 crores, and you sold that, one second, I think we have two names.
No, I remember.
Okay, so I'll take one and I'll add the other one. Here you go. Okay, so so the idea here is, if you owned a house worth, say, nothing, it was not worth anything when you bought it, but today somehow it's in a fancy area, it has appreciated to 50 crores. You sell that house, then you buy another house worth 60 crores. You put another 10 crores or take a loan of 10 crores. That entire 50 crore of gain, because you bought that house as nothing, maybe it's ancestral property, whatever it is, that entire gain was offsettable against the new house. This is no longer acceptable anymore, because after 2023, April 1st, only 10 crores of gains will be acceptable as investable in a new property. Above that, all gains you have to pay full tax on, which is whatever tax, whether it's 20%, 10%, that depends on you. So you essentially have removed these high-priced housing incentive. Very good, according to me, because we never should have had this incentive for extremely high-cost housing. And made this again good for us as asset managers, because उतना पैसा कमाओगे रियल एस्टेट में नहीं डाल सकते, MLD में नहीं डाल सकते, इंश्योरेंस में नहीं डाल सकते, किधर डालोगे? You put it into equity market and debt markets, which is good for people like us as asset managers. So I'm very happy for that, but I know that it will hurt the real estate industry. Sonam Kapoor, house ये क्या है? मुझे समझ नहीं आया. Sonam Kapoor did something.
So yeah. So there was, so she bought one house for some 40-50 crores 8 years back and sold it for 52, 53. I mean, marginal profit. Everyone said that itna chota profit ke liye, but we never know what back of stage calculations kya hai.
Sorry, I am like clueless in all of this. I don't even know who Sonam Kapoor is, but I will not ask that question here. We will go to the next slide.
Okay, so the good thing is that so no bad news is a good news that happened with the market right now. There was a speculation that will they change the slab rate or the of LTCG or STCG, or will they tinker the tenure? Will they make it 2 years, 3 years, etc. and all? None of that happened, and market got a big sign of relief. And that was the day that was the time when the market topped for intraday.
I tell you, man, this market, I mean, there's so many other things happening. People are calling me in budget day and asking what happened to Adani. Adani कौन देख रहा है यार? मेरे को तो बाकी कुछ देखना है. But apparently Adani also some drama happened. But anyway, that's not the point. Look at the chart. That chart shows you that the carnage that has happened, by the way. By the way, there are 2 or 3 more other things that has happened in the market, and it will affect the overall structure. One is that the restructuring of bonds there's a TDS on any interest on the market listed debentures, not market linked debentures. Market listed debentures, which means you know these NHAI tax free bonds and all that. They used to pay you an interest. Now that interest, because it was a listed bond, did not have any TDS. Otherwise, there's supposed to be a 10% TDS on these bonds. Because now it was listed, people did not put any TDS on it. So there was a 10%, there was no 10% TDS. So if it was 8%, for 100 rupees, you got 8 rupees. Now they're saying this is 10% TDS will be deducted. That means you will get less than you expect. That's all. That's all the difference is right now. But that means that if you've invested in these tax-free bonds, listed securities, you'll have TDS deductible. I think tax-free bonds, they should not be a TDS because there's no tax. So it doesn't make sense. But at least for taxable bonds, you will see debentures listed on the exchange. You will see some tax. This is not bad because at least for tax pehle pay ho jata na 10%. You have to anyway pay 25-30% on it in the brackets that you're in, most likely. So you might as well pay 10%, baki 20% you can organize at a later point. The reason they do introduce this is because people used to have these bonds. They would get this interest. They would not declare it or they would not pay for it. And now recovering money later is always a pain. They're saying about 10% to de do. Baki will see.
So they'll know also, right? Once you do a TDS of 10%, they'll know that 20 is pending. So it's far easier to do a recovery. Right?
They know how much interest is paid even now. It's like 5-minute job for them to find out. But now they're saying, forget knowing. Now I'm taking 10%. Baki ka tum bharo. If you default on the remaining 20, at least I've collected 10 from you. It's such a pay. Because if it's only some 1 lakh rupees of interest, okay, it is not worth the income tax department's time to even send you some scrutiny order. At best, वो कोई तो computerized आ जाएगा कि नहीं आया. आप उसको ignore करोगे, then they'll be like, whatever, man. It's just this thing. But of course, if you become rich later, then they will go back and say, oh, time पे आपने नहीं दिया था, उसका भरो penalty वगैरह. But if you don't become rich, then they don't bother because it's not worth the income tax department's time, right? So I mean, now they're saying, ki, boss, it's still not worth my time, but you pay 10%. So it's not bad. I mean, I think it's fine. You should have TDS. If you have TDS on something, you should have TDS on everything. So FD पे 10% TDS है. इधर क्यों नहीं है? It doesn't make sense.
Got it.
Right.
So initially, I think last budget they taxed the crypto, and now they are taxing. I mean, higher taxing the LRS. Already they have tax. Now they have increased the taxes on LRS. So
only death and taxes, permanent features of our.
Yeah. So we as a salaried employees may be little happy that they have given the new tax regime, but others they have incurred on non-new leaves, insurance sector, REIT.
No, well, I mean, there's another funda, right? If you're a consultant, for instance, if you're employees, we get a salary, we pay tax and then we spend.
Yes.
Now, if you're a consultant, the same consultant gets up to 75 lakhs per year. If you're a consultant in a services company, you can just say 50% is my expenditure. It's called presumptive taxation. 50% gone, baki 50% pay tax though. That 50% is your income. So essentially, if your tax was 33%, it's become 17%, right? Effectively. So you've deducted, 50% of your income straight away. Presumptive. If you're in a field that is manufacturing, it's only 6%, I think. 6%, that means if you make a turnover of, say, and the turnover can go up to 3 crores for an MSME. So if it's an MSME, you make a 2.5 crore income, you can declare only 6% of that, roughly 12.5 lakhs as income, pay tax on that, and boom, be done with it. So that way, it's actually good. They've increased these limits. Earlier, it was 2 crores and 50 lakhs. 50 lakhs for individuals, 2 crores for MSMEs. Now it is 75 lakhs for individuals and 3 crore for MSMEs. So depending on the structure, it allows you a little bit more freedom to be able to pay lesser taxes if you are effectively running a business. So it promotes people running their own consultancy services or small businesses and so on.
They have done a really good job for particularly MSME sector because the default guarantee was at 50 lakh. Now they have increased it to 5 crore. So
The
that's kind
credit
of
default guarantee, yes,
a
yes.
default thing.
I
That's a
don't know
good.
how to get that. It's very interesting philosophy because it's unsecured, or rather, it is collateralized with the government guarantee. So a
Yeah.
bank has to give you the loan, but
Hmm.
the government will pay the first 25% or 50%, something like that, and therefore you're protected up to that much. Only the
Yes.
remaining you have
So
to pay for your
fine.
own. And
Correct.
the interest rate will be lower because it's guaranteed by the government. So in the way that 5 crores becomes a much better way, you can take a much higher loan
Yes.
in today's world. How to get those loans? That I don't know. I'm not, in that, but I'm sure there are people who can help in this.
So that way, the budget looks very progressive, at least from the sector perspective, from the transportation, rural, agri focus. Also, there are some things on the agri also, which we have to get. But yeah, that's the
Yeah.
overall view.
Okay.
Should
By the
we?
way, the last bit is I think we should also, to tell everybody this. Your overall structure of taxation will probably move to the new regime over time. So whatever benefits you're getting as ATC and all that stuff are temporary. So if you're building long-term financial plans, don't think of taxation as one of the reasons why you should vote. All these people who build taxation thought process, MLD kharidega, insurance kharidega. Insurance, at least they've grandfathered. So current insurance policies don't get hit. It's only new policies issued after 2023 that get hit. So next 1 month you'll be bombarded by calls from all these insurance companies saying खरीदो खरीदो 31st को निकल जाएगा types, which is fair because that they're trying to make some money out of you from for the last time. But in reality, it tells you only one thing: taxes will come back no matter what you do. So in the end, don't make long-term financial planning thoughts using purely taxes as a reason. And sometimes you have to change. So for instance, if you wanted to invest 10% of your assets abroad, then this LRS route is going to complicate matters. Unless you're really rich and you have a 20% extra cash flow, or if you can handle the TCS yourself, then you should consider ki kya karunga, how should I do it in a different way? Maybe use Indian mutual funds, which don't have the same complexity. So you may have to change your strategy based on these tax changes that have happened simply because you want to avoid the cash flow considerations. But remember, in the end, that no matter what we do, as we get more affluent, the number of reasons to tax us, sometimes at source, sometimes as TDS, sometimes on transactions itself, will keep going up over time.
Got it.
Okay,
I
That's
think
a that's a great insight.
sorry.
there is one important point on the limit of 10,000 interest income on TDS. I forgot that. Any idea, Nihit?
There's something there. I don't know what that is. And there is some standard deduction also. No, I haven't seen that part.
Yeah, yeah, guys. If you know, please comment. I think that they changed that limit from 10,000 interest.
Oh, okay.
Anyway, okay. So over to you, Nihit.
Yeah, so
So,
Deepak, we have a few questions in the chat window. Maybe we can spend 10 minutes and take those questions. And after
so
that, I would request you to give us your takeaway of the budget. You have done the analysis. Now just let us know what we should take away from this whole budget. Good for India, good for certain sectors. So probably something that I could talk with my friends later in the evening that what was the takeaway. So that after we take a few questions that are here. So one very quick one. Do you think so? This again something that he's asking you to predict whether status will also be removed. Means it's a
at some point, you see, NPS is a removal of exempt, right? There's some taxation at the end. So your PPF and your EPF are exempt. NPS is exempt tax, not even fully exempt in the beginning, but some exempt and tax. I propose something called Mira, a retirement plan, which a separate account in India, which I like retirement accounts are in the US, which are exempt on entry, exempt on accrual, and fully taxed as income on exit. So it's not capital gains, nothing. It's just taxed as fully income on exit. That's the way insurance plans work abroad as well. And I think that is a great idea for India in the longer term. I think that will become, in some form or the other, that will come. It will not be an extension of the NPS. It will be a better way for us to manage our own retirement money. and this will happen if not this year. I mean, it's not happening this year. Maybe it'll happen in the next 5 years. But I'm sure this will happen as well. So EEE, I think, good to have, but it will be phased out over time.
Next question is, now that we are moving to the new regime and it seems apparent that the older one will be done by. So Naren is asking, will this impact insurance companies because they heavily depend on January, February, March quarter sales?
January, February, March quarter sales.
So these are tax. These are tax.
This will go crazy in Jan, Feb, March. No, they will go mad.
Yeah.
They will just buy, sell like crazy because सबको बोलेंगे 7% guaranteed return मिलेगा सर, आप अप्रैल के बाद खरीदोगे तो आपको नहीं मिलेगा. So people will buy, and that is how we are. We all are optimistic, right?
So the question is, in the coming years, this window will not be that impactful. This pitch will not be that impactful. That
it won't be impactful at all. There is no impact. As in, pitch करना है तो सिर्फ next 2 months. So right now, all the insurance companies are saying, boss, अपना आदमी लोग बेचो, जितना बेच सको next 2 months, please sell. So you'll find new policies also coming out. Everything will happen in the next 2 months.
Right. I think we have taken all questions. There's one last one from Viraj. Would there be any TCS if I carry some USD in cash while going to US?
Good question. I don't know. I think if you convert in cash to USD in India itself, you'll pay higher rate, but I don't think you'll pay TCS. And TCS is only a loss of temporary parking of money with the government, right? So if you don't mind paying the higher rate, then you might as well do the TCS conversion here, take cash with you, and then you have to deal with cash and all that stuff abroad. But yeah, I mean, I think that will still work. And maybe if you want to avoid the TCS entirely, this is the only way. But the card is super convenient, honestly. So 20% zyada rakho na yaar. So keep 20% extra money there and you'll get it back over time.
So next question is, for calculating 5 lakh annual premium amount, the premium paid for policies prior to 1st April 2023 will be included. I think
apparently not. It is only policies issued after April 1, 2023. So तुम 50 lakh भी दो कर चलेगा. After April 1, 2023, if you buy a policy worth 5 lakhs in aggregate, that means you buy 2 policies worth 3 lakhs, that also qualifies. Then you will have the charge.
So if it is going to be grandfathered this way, then the next 2 months sales are going to be something. So
you will get calls. जितना Bajaj Finance नहीं call करता था, उतना insurance company call करेगा.
So there's some sales manager very happy somewhere because of their JFM targets.
2 महीने का प्रॉब्लम है यार. हर आदमी को 1 साल आगे देखना है ना. 2 महीने कमा लूंगा, फिर उसको कैसे कमाऊंगा? Because if I give big number in JFM, then AMJ में क्या करूंगा मैं? I will have ridiculously low numbers. As long as everybody knows it's one time, ठीक है, but
ठीक है.
Windfall gain.
Moving on. So Deepak, we have been live since 1 hour and 15 minutes. So your final take on how do you look at the budget as a strategic thing for the next 5 years, for the next 10 years? Which are the sectors which you are, if I may ask, which you are bullish on? Which are the sectors which you think will lag? And your general takeaway, your feeling of this budget. Of course, we'll hear more from you as the time goes by on Twitter when we decode this more. But right now, as of 5 p.m. on budget day, what are your thoughts?
So here's the rough detail. Okay, we'll do a Twitter space later as we get more information, I guess. But here is the interesting piece of it. The government is spending on capex. Very big deal. They're spending on defense, rail, roads. Very big deal. That's what they should be spending on. They should not be spending on bullshit stuff. They're spending 2 lakh crores on giving people free food. क्यों? मतलब आदमी खाना खरीद सकता है यार. They will buy. You give them free, of course they'll take. Everybody will take free. But you make it possible for them to buy food. They will buy the food they want, not the food you give to them hand over wala. So this policy of spending so much on subsidy. Now I'm okay with it because you're spending 10 lakh crores on roads and all, because ज़्यादा खर्चा उधर कर रहे हो, where you're actually building infrastructure. You have to make it easy for businesses. Unfortunately, they did not remove the angel tax. They increased the scope actually. They said कि अब पहले तो ऐसा था कि if I invest as a resident Indian in another company, that company has to prove that I have invested at some premium, get some valuation, all that drama. And but now they have said even if foreign fellow invests, earlier foreign fellow invests, they didn't have to ask. Now if foreign fellow invests also, they have to give the same kind of explanation. So they've made it more difficult for people to invest in it. They've also they've done some rationalization of what an NBFC means, but there's a particular rule that says an NBFC that is created, any company that is created whose 75% of the money comes from securities business is classified as NBFC. And why is this rule there? It's not, doesn't make any sense. If I do not take money from the public, I am taking money only from Deepak Shenoy and from Neet Kshatriya and from Krishna Pala. What is the need for that company to be classified as NBFC? We are three friends, we are putting money together, we are buying stocks, it's sitting in the company's name, so what? There is you need to delineate, make this easy, because this company can collectively be a few people put together, and that can go and invest in stocks. It's not something that I sell to other people, it's just a close group of known people. So it is not a collective investment scheme from this, like SEBI is worried na ki har jagah poster laga ke paisa utha rahe ho. It, such things should be allowed, and we should encourage people to form entities that are investing entities without having to go to RBI and get an NBFC license. That is just terrible stuff. I think that is one of the drawbacks of this budget. But by and large, the budget is very positive. If you ask me, the reason the budget is very positive, at least to me, is that they have not disturbed some of the core structures of the budget. They have made people try to make it more attractive to go to the new regime. In fact, I would have said new regime में 25 lakhs के ऊपर 30% बनाओ. And more people would choose the new regime, less work for tax department, less exemptions, better for the industry, better for everybody to kind of move into it. I would have actually said, do this faster, but they're doing it in a slower pace, which is fine. Over time, I know that, the exemption business will go away. The budget should be largely about how the government outlay is. They have managed to control the deficit a little bit more than I thought. I thought the deficit will be very high. But you see, the government has been able to collect taxes at a much higher rate than the GDP itself. That means we are not only growing at the rate of GDP in terms of tax collections, we're growing more than the rate of GDP. Means tax compliance is increasing, both from a income tax perspective and from a GST perspective. We're seeing higher and higher growth. This is good because it increases compliance, but at the same time, you should increase the turnover of transactions. That means the money flow should increase. That means people should be able to get more credit. Credit growth again in the economy. That's a good thing. We should see more of this happening. The budget itself, which has largely been viewed as concept tax kitna upar hoga, kitna niche hoga, should not be the case. You have only one tax rate, बस वही है, 50 साल से वही चलना चाहिए. US में they don't change tax laws every 2-3. It's only some laws that might come in once in a while. But in general, your tax laws should be stable, and you should promote, the creation of entrepreneurship, whether it is small or large. India is largely an entrepreneurship country. So they're doing some things over here. They're saying, okay, we'll create some collective intelligence around AI, around fisheries, around agriculture, animal husbandry. They've talked about this. We've seen this in the past, but nothing has come out of it. But hopefully this is how we build India's core capital. And build us into more of a manufacturing plus services economy rather than just a services economy. I think that is where the budget makes a lot of sense. However, this time it's also very clear that तुम जो भी tax advantage के बारे में सोच रहे थे, government भी उसके बारे में सोच रही है. तो आज है तो कल नहीं रहेगा. तो आप जितना भी स्मार्ट बन लो आज, एक साल के लिए बनोगे, फिर पता नहीं क्या होगा. So at the end, you have to make money not by the tax arbitrage. Of course, there is money in tax arbitrage. There's no doubt about it. But that is short term. In the long term, and you know what this thing has done? Throw out real estate, expensive real estate, not going to happen. You're not going to get tax advantage. Expensive insurance policy, nahi milega. Expensive MLD, nahi milega tumko tax benefit. What are they saying? They're saying, boss, ya to tum equity mein aao, ya straight away debt mein aao. Ye चक्कर लगा के टैक्स बचाने वाला काम मत करो. Better go into something that is built for investment, either a mutual fund, equity direct, whatever you want, or go and buy a fixed deposit or a debt mutual fund, which are also built specifically for investing. you are actually taking risk over there, and you're not hiding behind some MLD structure. So they're making it more clear that you have to become forefront in taking your risks or not taking them. And not taking them means higher tax, taking them means lower tax. That is clearer and clearer now. You can't hide behind this. Longer term, I think what we have is a very interesting part. Luckily, the budget is boring. I mean, this time it was not. I mean, it was a very interesting speech. उसके बाद ये memorandum सब अच्छा ये भी टैक्स किया, वो भी टैक्स किया, वो हमको बाद में पता चला ना. So it should not even be this interesting. It should be very boring. It should be just a statement of upon where are we going to spend the money. And hopefully, in the next few years, we'll reach a point where you will never need to see a 4 o'clock क्या हुआ था budget में video. It will be like one headline tomorrow in newspaper, and that's it. Look forward to that time, but before that, I think we'll have to keep decoding things like this for a few years to come.
Right, and that reminds me when you say that we should have a headline ki kya was the budget. Reminds me when like 12-15 years back, 12 years back I was going for my B school interview, and the front page, it was similar time, the front page was everything that got cheaper and everything that got expensive. So juta महंगा हो गया, TV सस्ता हो गया. So I don't know if we still get that graphic tomorrow, but it's a long leap from counting things that got expensive by the number and going to a phase where it's just an headline and business is going on as usual.
Yeah.
So with that,
guys, key takeaway, as Deepak mentioned, from this particular budget onwards, it is evident that don't plan your long-term financials by looking at the tax arbitrage, because that is going to go away in the future. So please keep that in mind.
Right.
Yeah. Cool. I think we should close. It's been 1.5 hours.
Yeah, we'll close. Thanks everyone for joining in. We had around 200 people at peak watching this broadcast. So thank you very much for staying on. We'll be live again on Twitter Spaces at 9 p.m. today. And there we'll probably talk about something else, and we'll go deeper into some other topics, or maybe we'll have comments from people who are joining in. So if you are free, then you could join in at 9 p.m. So that out of the way. Thanks Deepak, thanks Krishna. And from next time onwards, Capitalmind will do a live show whenever there is an event, whenever we have something interesting to talk about. Until then, you can catch us on Twitter at @capitalmind.in and at Deepak Shenoy. Thanks once again for joining in.
Thanks,
Awesome. Cheers.